Greetings, this is Jeffrey Scott, and welcome to this week's, edition of my top-down review, which is really, for those of you who have not been here before, it's as much a bottoms-up as it is a top-down. My name is Jeff Scott, again, and here's my contact information. I have two emails that I use, so I decided to put them both up there. It is about 8 p.m. It is September 22nd, and I have no idea what the futures are doing, but if I was a guessing man, I would have thought that they were doing poorly. Or, let's see. It was not a good day in the market on Friday for our types of stocks, and it may or may not be an indicator of what to expect. Let's see. A quick check on the pre-markets as I start here. Or maybe not a quick check. Oh, man. There we go. Well, doing not much. Obviously, that's reflective, I think, of last week, I hope. Looking at these being positive, I suspect these are not fully inclusive of what we saw at the end of last week. All right, so real quick, as I titled today, is this a pause to refresh or a bigger move down? And as I've said over and over again over the last several weeks, the seasonals certainly would argue that we are due a bigger leg down. But I also say I'll trade the market I got, not the one I think I should have. Disclaimer, educational purposes only. Anything I recommend is in the spirit of education and not investment advice. I am a doctor and not a broker, and keep in mind that most physicians lose money, and I'm not affiliated with any software vendors or trading companies. Tools I demonstrate those that I use in my daily trading, and I have paid for everything I show you. I actually have hidden my desktop today, but those who have been here before know I use a lot of different programs. But I could really summarize it by saying I need a real-time trading platform of which I use TradeStation or TOS. I need an aftermarket analysis program that is quick, effective, and one that I like, which is HGSI. I use EdgeRater for back testing and for market timing. I'm a big fan of seasonals, and I use Magenta Trader for that. And I'm a huge fan of Ian Woodward and Ron Brown. They're free. Ian's free blog, Ron's free weekend reviews, and then their newsletter and daily market updates, which are some paid services. Very quickly, as you've seen this before, I have specific influences that have driven my style. High growth stock investing I learned from Ian and Ron. Elder has taught me things about force index, some of the psychology of trading. Van Tharp has taught me about position sizing and money management. Stephen Bigelow is my candlestick guru. I started all this by reading O'Neill's book, and if you don't read it or you haven't read it, shame on you. And if you haven't read it in the last year or two, it's always worth a good refresher. And just when you think you've sorted out what O'Neill thinks, then come along Gil Morales and Chris Katcher, two very smart folks that used to work for O'Neill, and they've now got a couple of books, Trade Like an O'Neill Disciple, Trading in the Cockpit with the O'Neill Disciples, and then there's also a short-selling book that Gil wrote when he was with O'Neill. And these are really, they take the O'Neill ideas, they put them to real time, they add steroids, and I find them very interesting, educational, and I use a lot of their things such as pocket pivots and bobble gap ups in my everyday trading. So I always start by asking, where is the market? And I think it is really clear we're here again. Now, here again may mean the beginning of the big drop. Frankly, it wouldn't shock me if that's what occurred. Or it may mean that Friday was an options expiration fluke, and we're going to go back up with another leg up. I am, in my mind, positioning that it's the start of a leg down, and I'll show you some of the things that have me concerned, and it's tempering my enthusiasm on the longs. However, I could change that 5 times before the morning happens. not going to spend much about this, but it's really hard to go short in a rising market and go long in a falling market. So you need to know where you're at because it really gives you the directionality of your trades. So as always, I look at hundreds of charts before I do this talk. Today was over 500. In fact, 591 to be exact. So here's a couple things that I learned. It really wasn't a bad week for high growth stocks, but most of the move occurred before the open on Monday. So even though the S&P 500 did not gap up much at the open Monday, a lot of the stocks that we follow did. And as we talked about, a lot of it was, well, the SP did gap open, but percentage-wise, it was a lot less gap open than the stocks. We talked about last Sunday early that I'd mentioned that summer's withdrawing would be good for the market and cause a weaker dollar, and that's exactly what we saw. Now, with the moves we've seen the last couple of weeks, the market is extremely overbought. Last week I mentioned that I saw leadership in technology, China, solar, and gambling. And interestingly, although I thought they'd be on the outs, a lot of regional banks, maybe it's because they fell earlier and are setting up new bases, actually looked like they were emerging, as well as some of the big construction stocks like Fluor, not the home builders, but the ones that do major construction. Energy continues to look interesting. Now, but what kind of energy? The oil line transmission with the higher interest rates, very few of them made it in my top 500 stocks. Refiners, I don't think I saw one of them, which may mean they're getting near a bottom because that's very unusual. Not, what I saw were a lot of, I saw some service stocks, Halliburton probably being my favorite, and a lot of junior oils like Kodiak, like Cabot, maybe not so junior. Let's see, Triangle, which we've talked about, Oasis, were on the list. On life support, gold, silver, home builders continue to look awful, although you saw on Wednesday, or when the Fed came out Wednesday or Thursday and said they weren't tapering, you saw that the home builders had a nice run up, but then they fell back on Thursday and Friday. Don't forget the seasons. The seasons are negative for the market right now, and there's a lot of smart people calling for a major correction between now and the middle of October. But as I always say, trade the market we have, not the one you think you should have. And just think about this for those of you that like football. If you would believe that Rex Ryan made a good thing by having his quarterback injured so that Geno Smith could play, and they would actually win games, of the New York Jets quarterback who, I'm a part-time New Yorker, and Ryan put in his player, he put his starting quarterback in, Sanchez, at the end of a nothing game in the exhibition season, and he got injured. He took a lot of heat. So today, Geno Smith threw for over 300 yards and a couple of touchdowns and led him to a win over the Jets. So a lot of times the naysayers may, all be on the side of you're going to go down and your market may go up, because not a lot of people thought that Geno Smith was ready to lead the Jets to a couple of wins. That didn't work, but what the heck. We'll take a look at highgrowthstock.com for just a second, and then we'll go on and finish the program. Everybody knows I'm a homer for this. What does that mean? It means that I'm a user of their software. I've been involved in some of the developmental discussions. I know kind of where the future is going, and to me it's the best analysis tool known to man. But like you, I've always paid for the program. I also pay to go to the meeting, which I'm going to mention very quickly. So if you're not busy on this weekend coming up in October, this is likely to be the last workshop. Whoops, I didn't want to hit that one. I'm sorry. It's going to be October 26th, 27th, and 28th in Palos Verdes, California. Ian is outstanding. Ron is outstanding. The networking you'll get from the others in the crowd is outstanding, and I urge you to attend. It may look like a lot of money, but the neat thing is we talk all day Saturday and Sunday. We run different scenarios. We talk about stocks, and then most of us sit there on Monday morning and trade the stocks we talked about Saturday and Sunday and make more than enough to pay for multiple seminars. Whether the market goes up or down is sort of irrelevant. If you're new to the program, see this on YouTube, for example, free 30-day trial. They don't even ask for your credit card. The only thing I want to make sure everybody knows is that you go into support, add-ons, and you make sure you download these 2 exec files and install them and then run the program again, and that will make it so you have all the charts that I show you tonight. And then the other thing is under investing strategy, there's Ian's blog, which I'll go to in a second, but both Ron Brown and I post things frequently and include things like movies, as you can see right there. And those are all for free. And as I mentioned, Ian's got a blog site. Let's see if I can get to Ian's site. And he usually is very busy on the blog in times of market entropy and if he thinks the market's about to change direction. So look for Ian to update this sometime tonight, Ian Woodward's investing blog. I have not logged into the program, so anything I've shown you thus far is provided at no charge. So those who've been here before know the first thing that I want to do is to get out of my PowerPoint. So let's close it down, save. And yes, that by the way is a retirement present I got from my wife. I'm married to the greatest woman ever, and you just need to have all your spouses listen to this so they buy you a Ferrari for your retirement as well. I like to look at how I did last week and how the market did, and I use that sort of as the beginning of the presentation. So I'm going to jump into TradeStation and take a little look at the major markets using the elder stuff. And when I say the elder stuff, I look at things like MACD divergence, I look at his envelope, but I mostly look at the impulse and the color of the price bars. And those who've been here before know that on a green bar, I'm free to buy or hold. On a red bar, I shouldn't be buying, I should be considered selling or holding. And on a blue bar, it's sort of free to choose what I want to do. As you can see, the S&P 500 traded up to the upper of the auto envelope. It actually went beyond it. And you can see how it pulled back on the last time, turned blue at the bottom, bounced off the auto envelope, ultimately changed green all the way up to the top, and is blue again. Well, you know, it's not hard to figure that there's a high chance that it's going to come back down, especially the fact that it closed so near the low of the day on Tuesday. The weekly and the monthly are still green, and I was trying to figure out whether or not this last S&P 500, yeah, I'm not going to get that excited here about the divergence, but I'll tell you, you had huge divergences back here in August where you made new highs and barely broke the midpoint on the MACD histogram. We have a little bit of a divergence here because we made a higher high compared to back here where my arrowhead is, and we did not make a higher high or even get exactly to the same point on the MACD. So there's still some divergence, which would predict some weakness. So the big stocks, S&P 500, at a high but turning blue with a divergence. If I look at the NASDAQ, I see at the top of the auto envelope turning blue. Again, I clearly see a divergence between the high on the left of the MACD, and I'm horrible at drawing these things, so I'm not even going to bother too much, I think. But well, it didn't help us, did it? All right, so you can see that the peak here is below the peak here. So even though we made higher highs, we're seeing divergence on the NASDAQ, and Elder teaches us that divergence would give an indication that we're going to see lower lows and that this trend is running out of power. And you can see the NASDAQ has gone blue, although weekly and monthly are still green. If I look at the Dow, the 30 large stocks that keep us so engaged, you can see a rough day on Friday with a big down day closing near the bottom on a blue candle, or a blue price bar, green on the weekly, blue on the monthly. Not a divergence on the histogram, but a divergence, maybe a divergence on the MACD lines. So what do I see here? I see three markets, all of which have traded up, but all of which look like they're getting tired and had a rough day on Friday. Now, Friday was triple or quadruple witching, so it wouldn't shock anybody that Friday we had lots and lots and lots of volume. Now, I also like to look at how our stocks are doing. So this is the group performance analysis. This, frankly, is a great thing that you can do in HGSI. You can take any group of stocks and you can set parameters for how many you wanted to buy, when you bought them, when you sold them. And then you can compare different groups to get a good idea of what's working and what's not working in the market. So I ran this search using all the different groups that I look at over the weekend, and I started at the close of Friday, the 13th, to the close of Friday, the 20th. And it gives me a sense of where the interest was. So the first thing is I scale down, and I see that there's very little red. So that tells me that the market is bullish. Okay, so the market had a good week. All right, then I want to find the S&P 500, and I see the S&P 500 on a Friday-to-Friday basis was up 1.3%. That's not a bad week, and if you can think about the market, if you had that every week, you should be very happy. Now, my buys outperformed just a tad, only up 1.42%. My existing holdings were up a little bit more at 1.55%. And I don't mind showing those because I think it's important, because this is how I invest. And if I underperform routinely the S&P 500, then why would you want to listen to me? I don't consider that a very good week. But if you look over the last several weeks, I've had a lot of 3% weeks. Now, the HGS 100, which was selected on Friday, was up 2.38, and the IBD 50 was up 2.81. So that makes me a little bit bothered because it means my performance was less. But on the other hand, it makes me happy because it told me that my type of stocks that I invest in, despite a tough Thursday and Friday, were up for the week. Now, it's interesting. I get a lot of comments, Jeff, you do so much work. I don't want to do that much work. How do you make my life easy? And the program has these things called smart groups. So I've highlighted a number of the smart groups that I go to every time. The best of Woodward and Brown was up 6.53%. Now, they're not always up, and if the market tanks, they're going to have a horrible week. But if the market does well, the stocks that did the best last week usually do the best this week. I've noticed several times over the last couple of weeks that the stocks less than $5, excuse me, less than $10 have been doing extremely well, and this was true again. I'll show you how to find these in the program, but these are pre-planned searches done every week or every day for you, and the performance of this repeatedly have done quite well. You can see here that some of the other smart groups I like, ERG 240, strong EPS, relative strength, and group rank was up over 4%. How many of your portfolios were up over 4% last week? And you can see so on and so forth. And then I do that little thing I call the Group Inclusion Filter All-Stars, and I don't look at the top 10, I look at the top 30 for my portfolio, and they were up 3%. So the point of this is, number one, strong week in the market. Anytime a major index is up over 1%, that was a strong week. Number two, growth stocks are outperforming the market as a whole. That's good for our type of investing. Number three, the stocks chosen by HGSI smart groups are very effective right now in the market. So that's a shortcut I'll show you how to use to make your life easy. Now, a lot of people say, but Jeff, that's not fair. What about Monday to Monday? And you know what? This is a week where it was a big difference. Now, it was and it wasn't. The S&P 500 was up 1% from the open Monday to the close of the week, which means there was a gap of about 0.3%. Many of the growth stocks gapped up a lot before the market opened Monday, and you could see that the IBD 50 only was up 1.42, the HGS 100 1%, Sprinters 0.89, and I have to scale down a lot. My buy picks, which I'll show you before, were up over the S&P 500, were up just a little bit once you took the gap out, which was kind of interesting, which means they just really popped at the open. And I believe that my stocks, if I can find them, usually I highlight them because it's really hard to see these things when you're sitting in my shoes here. Here it is. only up a tad if you don't consider the gap. Well, the good news is stocks that I own, I got the benefit of all the gaps. But the point there was to show you that most of the gain, or much of the gain in the growth stocks, occurred with the gap on Monday. And most of the other gains that we got related to the Fed not reducing easing were evaporated at the end of the week. I like to look at Ian's bucketology, where we take the S&P 1500 stocks. We look at where each stock fell in relationship to the upper, middle, and lower Bollinger Band, how many were above and below, and we plot it on the left, and we look at a pie chart on the right looking above or below the midline. In a bullish market, you should see over 80% green, which we do, and I'm not here live on EdgeRater, but if I was, you would see that we're less overbought than we were a couple days ago, as we had 20% or so, 18%, 20% were above the upper band. As I said before, when you get a lot of stocks trading where they only trade 5% or less of their time, that they're probably not going to stay there. And if you're a lot above the band or a lot below the band, the market usually moves the opposite way. I also like to track the Hindis to get an idea if there's been any more sightings. And for those who don't know what the Hindenburg omen is, it's bad. When you see a series of them, you need to be concerned about a market correction. About 25% of them turn out to be meaningful. The more meaningful ones occur with multiple over a course of several days to several weeks. And there has not been a major correction in the last 30, 40 years that was not accompanied by the Hindenburg omen signal. We had multiple signals fire in the month of August, but we have not seen one since what looks like August 14th. So since we've not been there in a month, I'm less concerned about them. But I do realize that in the 2007 market top, we saw two peaks of the market, an early summer and an early fall, if I remember correctly. And both peaks were associated with the Hindenburg omens. It was the second market peak that really predicted the fall. So I'm going to be looking for that as I go forward. Now I like to go into the market using HGSI and get some ideas what I think the market is doing, and perhaps some comments about what you might want to be doing with your investments and your considerations of purchases. So I open up the warehouse view. Now my computer has got a glitch, and I think my processor has lost some of its cores, and I'm going to send it back in, but it's the only computer I have that is the right resolution, so I thought I'd do the last video before I change. So I go into the Woodward and Brown user groups, and you don't get these groups until you use those files under add-ons. And I go into the first one, which is Major Markets Plus. I go to top-down view, which is sort of balanced over several weeks of technical performance, and I get an idea of where the strength is. So no big shocker. The Treasury bonds were up because the dollar fell for the week, and it's not much of a surprise that the markets did well, even with Thursday and Friday, and gold and silver continue to do poorly. Now the really big stocks were at the bottom of the list here. If I look at 5-day performance, you'll see that the transports and the small stocks outperform the big stocks. And we have a lot of small stocks in our growth stock portfolio, so that was supportive. And that silver, gold, oil, gas, and volatility was near the bottom. I hope you can't really hear. My wife's watching the Emmys, and she goes crazy, so I apologize if you're getting sound effects. 1-day performance, you'll see that the market was bad on Monday. On Friday, gold and silver got hammered, and so did most of the major indices. So I like to look at, very quickly, all the majors. So let's start with the S&P 500, and I'll spend most of my time on this one, and then I will quickly, hopefully, go through the others much quicker and just sort of demonstrate that they're all having the same problem. So I'm sure you've been here before, but I like to spend as I said, a few minutes of this and looking and getting an idea of where I think I'm going to go with the market, or where the market's going to go, whether I think it should go there or not. And one thing I have learned is the market really doesn't care what I think. All right, hold on a second. Here's what I want. All right, so let me clear this out. So let's bring into this, all right. So this is a bingo, and the bingo is something that fires in HGSI when you've got the baby out with the bathwater, and it's a sign of capitulation in the market. So this capitulation occurred in the middle of November in 2012, and it was spot on because we had the low of the market the next day, sort of a hammer formation, a gap up, really a bullish kicker gap up, and then the market's gone up from there. So let's start looking at the S&P back to the beginning of that downtrend, which corresponds with where we are right now. So with HGSI, I can take the top, pull it to the bottom, and I can see we fell 8.9% in 43 days. Now, if all you did was buy that dip and keep holding it and look at where you are today, then over the last 211 periods, you're up 27%. You can make a strong argument that you should just sell all your stocks and enjoy the rest of the year, because it may be a long time before you get another annual return of 27%. Or you could be a trader, and then you look at what you've had are a series of rises. Here's about 8% in 22 days, and then a pullback here of about 3.8% in 7 days. Pullbacks are sharper. A rise of 9.4 in 34 days, and a pullback of 3.2 in 5 days. A rise off that 50-day moving average, and these are all rough, 8% in 31 days, and then a pullback to that 50-day moving average, a little bit beyond, 3.8% in 6 days. A rise in the market of 9.4% in 24 days, and then the deepest pullback perhaps to date in this run, 7.4% over 22. Then the last set we saw was a rise in the market of 9.8%, and then a sell-off of only 4.9%. So we really have not had a big move in the market. And as I look at them, we had a rise in the market here in 14 days of 6.3%. Now we're down in 2 days about 1.5%. So if you just look at those zigzags, where do you think we're going? And to me, it's pretty simple. If I had to guess where we're going, my guess is, and I don't know any more than you do, my guess is we're going down here. And that we're going to go down and we could test this low. We might just test the 50, which would be nice. Or we might go down here and test the 200. And there you have my my 3 potential drops. Test the 50, test this previous low, test the 200. And just out of curiosity, we run these in green. If we go down the 200-day moving average, you're looking at about an 8.5% correction, similar to what we saw here and back here. If we go down to the previous low, you're looking at about a 5.9% correction. If we go all the way down to the 50, you're going to look at another double what we've had, so 3.2. So I think that the market has topped. I think this is a seasonal period of weakness. It would not shock me to go visit 1584. I think it's more likely we come down and we test that 1630. That's just one person's guess, and all it is a guess. but I can't believe we're going to continue to go straight up. What about other markets? If I look at the Dow Jones Industrial, and you know it's right in front of my face, it's just hard to see when you're looking for. The Dow Jones Industrial, let me make this a little bit bigger. So this had a pocket pivot down on Friday. Very heavy looking. It looks like it's going to want to come down and get down into this range. Wouldn't surprise me. The 50-day would be nice, but we'll see if we can get around with just a 50-day. So again, similar to what we just saw, I see a market that's had a very profound run up and getting into this zigzag time, and it's going to zig here, it's going to zag back down. So I think my guess is it's more likely to go down in the short term than to go up. The NASDAQ, same pattern. You know, it's much healthier than the others, but it too had sort of an evening star setting up, and it wouldn't shock me to see it come back down here to the 50. In fact, going sideways, pulling back to the 50 may or may not be painful for a few days in your portfolio, but could be deemed to be very healthy in setting up the market for a year-end run. If I look at small stocks, the Russell 2000 had been leaders in the market, and like the NASDAQ has not pulled back much, but clearly, you know, a pullback to this 50-day, 17-day cross here is not the question. Now, am I bearish? Well, you know, I'm short term. I think the market's overbought, and we're likely to go sideways to a small correction. Long term, I'm still very bullish. I think we are in the early stages of a recovery, albeit a tepid one. But when I look at Congress, the debt ceiling, Syria might be better, but is it? I look at whether or not the Fed starts talking about tapering in October. And I look at historically how bad October is. I just think that it's caution is warranted, I guess is all I'm going to say. Now, those all look fine. They've been nice charts. This is what ugly looks like. Here's gold. Now, gold keeps trying to recover. And you know what? Gold has had a great recovery. If you were smart enough to have bought gold in late June and have sold gold in late August, you had a 20% return. And then from that high to the intraday low here, it sold off about 9.5%, and it's struggling to get above and stay above these moving averages. I think gold's got a ceiling of that 200-day moving average for now, and perhaps it's just going to be range bound in, you know, between where what here and here for a while, and just continue to zigzag. So gold certainly a lot uglier than the major indices. Silver, I bet it looks a lot like gold. Almost looks like the same chart. Same pattern, big rise off the bottom. On Wednesday, when there was lack of easing, reduction, it shot up, and then it came right back down on Thursday, as did many other instruments. So gold and silver don't look that exciting to me right now. Maybe it's at a bottom, but then you're bottom fishing. The VIX is low, and you know, a low VIX is typically a time of excitement in the market for the bulls. We're not as low as the VIX has gotten, below 12, and you see we had a long bottoming tail here on Friday. Not quite a hammer, it's got a little bit above it, and perhaps evidence that you know, if the VIX starts to put in the bottom and go up, that's not great for our stock market. And then the other thing that's related is the dollar. And you can see that the dollar, although it had a huge sell-off on Wednesday, and if you think about it, gap down on Monday, although gave up some of its gains or losses with the Summers, didn't do much on Tuesday as we're waiting for the Fed. Fed said continued easing, which is weak dollar, pushed it down, and then Thursday it stages a reversal, It'll be interesting to see what happens with the dollar. Janet Yellen, very dovish. Probably bad for the dollar and good for the stock market. What else do I like to look at? I like to look at some of the internals. So I go down to the next group, which are the calculated indexes, and I'm going to look for the S&P 1500. And I'm going to look at the eye charts very quickly to see how we're looking from the perspective of market internals. So some good news, some bad news. We turned red on the force, on the daily force, two-day force on Friday. That's pullback. We do have a positive DI plus over DI minus. We had a eureka on Wednesday, the day they decided not to taper. We had a huge down day on Friday, but keep in mind, Friday was also I think it was actually quadruple witching. If you look at new highs and new lows, you continue to see that the highs versus lows compared to the cumulative 13 DMA are above it, which is bullish. And then if you look at the color that says new highs minus new lows are greater than 65. So we still have a lot of new highs, and you can see during periods of weakness you get red, which means more new lows. If you look at accumulation and distribution, the A's were on their way up. They went sideways, while the E's have turned down, and the D's had come down a lot and also went sideways. B's had a big move up, and C's came down, and you could see the A and the E cross. That is a positive sign if you're looking at the health of the market. Again, A versus E, you want the green above. And if you look at the percentage of A and B compared to their 10-day moving average, you can see that it's gone above it, which coincided with the market move up. So market internals here look much improved. If you look at advanced declining volume and issues, you could see that we triggered, maybe 2 weeks ago, we triggered a green bars for both volume and number of issues. And on Wednesday, we had advanced decline volume was greater than 5 to 1. Also a potentially bullish signal. So the market internals are looking better. I like to look at, if you look again at the S&P 1500, and you look at how many stocks are trading above their 20-day, their 30-day, their 50 and 200-day moving averages, and then you stick the prospective moving average on that number. You want the blue, which is to be the percent above, to be above the red, which is the moving average. And you can see as the market recovered the last couple of weeks, we had crosses, but we're already crossing back below on the 200 and getting close on the 50. So perhaps more evidence that we're losing steam. Other things that I like to look at, I don't usually look at this one, but I think it was worth looking at today. If you want to be long the market, you see the market overall is weak, I might ask, where do you want to go long at? Because there's a lot of weakness out there and not a lot of places that look attractive. Just to give you an idea of that, not to say I didn't find 50 stocks worth considering to be long on. Here are the consumer select sector spiders. I'm going to look at all the ETF sectors. Big run up, it's rolling over. Here's healthcare select. Run up, rolling over, pocket pivot down. Don't like that. Technology select. Evening star formation, rolling over. Industrial select. Evening star formation, rolling over. S&P 500 we've already looked at. Looks like all the rest of these charts, it looks like it wants to roll over. Financials, rolling over. Materials, and materials were strong early in the week and a big reversal on Thursday and Friday. Whoops. Staples, reversal. Energy, reversal. Utilities, reversal. Now, any of these can reverse on Monday. There could be news coming out. There could be a settlement in Congress. You know, the Russians could come in and take out all the Syrian gas for us. There could be acknowledgement that the Syrians are meeting their obligations. And it wouldn't take much for the whole market to go up, because it is, as we all know, extremely news-driven right now. But the bottom line is the indices look weak and the sectors look weak. And if you don't have a whole lot of good stuff going on in the big boys, in the major indices or in the sectors, sometimes it's hard for me to believe that you can see a lot of individual stocks that are going to outperform. Although I do look bottoms up, still kind of flat, as well as tops down, I recognize that much of what my stocks are going to do are going to be dictated by what the market is doing, probably 60 or 70%. 20%, 30% might be dictated by what the sector is doing or industry, and maybe only 10 to 20% by the stock that I choose. So it doesn't matter what stocks you pick over the weekend, and what I look at. If the market is weak, it's not good to be long. So next thing I look at is industry groups, and I see I have 146 of them. And if I want to get very short term what's working, look at 2-day force, you could see that that number, which was in the 70s, has really tightened up. Now, I always like it when what I see on this view sort of matches up with what I saw when I looked at a lot of different stocks. And although it's not perfect, I see a lot of, I talked about regional banks and being surprised. And here's banks, it's thrifts and mortgage finance. I talked about technology, and you've got semiconductors, you've got application software, you've got electrical components and equipment, semiconductor equipment, electronic manufacturing, communication. I talked about the big construction companies. They're sitting up there as well. So whether you look at strong stocks from a bottoms-up perspective and try to find what's working, or you look at from a top-down perspective, you're probably going to find a similar answer. Now, I'd like to right-click on these and look at the first 10 and see if there's anything to buy. The only automobile manufacturer trading above the index, and that's about as far as I usually like to go unless there's a special situation, is Tesla. Tesla's had a major run. Everybody on this call knows that, so I don't need to spend a whole lot of time talking about Tesla. But you can see Tesla had a pocket pivot up on Thursday and a good day on Friday when the market was weak. I've seen a number of targets now come out on the street at 200. It probably is a disruptive story, and one that is early in its lifetime. If they can get the battery sorted out, it really becomes a major story moving forward. It does have a PE that's not mentioned because they've been losing money in the past. They're starting to make money, but it's expensive. But I don't know if I heard Kramer or one of the other guys I listened to, I think it was one of the other guys last week, basically saying that valuation has never made anybody money and everything is about technicals, and that, the fundamentals are great. I want to fish for fundamentally strong stocks, but what's going to drive a buy and sell decision is the technicals. Now, I'd like to buy the stock when it pulls back to support, and as you can see, for months, that 17-day is the time to buy it, but it looks like it's off to the run. A kahuna, a pocket pivot, best looking chart in the market. How can you not love Tesla? But it is expensive. Next one I look at is whoever's second on the list, regional banks. And I mentioned that several of these made it to my list. Now, none of them are above the index, which is interesting. But let's just take a look at the top couple that come out here and see if there's anything that we want to make do of. So it's had a nice run up. It's had a number of pocket pivots, a kahuna on Friday with good volume. Everything is green, makes money, but not much earnings growth. This is First Republic Bank. So something must be meaningful, how banks were affected by weak dollar, by Janet Yellen coming in. Perhaps there might be some changes in some of the banking rules, but these guys popped up. Cullen Frost Banker, I don't want to touch this one. It's been in a downtrend, but it did have a pocket pivot. If it got above that 50-day moving average, it might be interesting. Huge volume on Friday. PacWest Bancorp, setting up here, sort of a double bottom on this shallow saucer. Number of pocket pivots, a kahuna, huge volume. Certainly looks like it's setting up. Capital Source, this was on my list. I love stocks that go sideways, in this case a downtrending sideways to their major moving average. You've got a consolidation here with the 17, the 8, and the 50-day moving average on top of each other, a couple of kahunas, a number of pocket pivots. To me, the least resistance of this stock is it's going up. I don't love the earnings per share growth, but it was one that I thought looked very appealing. Don't know anything about Bank of Hawaii. I did look at it personally a week ago. I don't like the shooting star-like handle there, despite the fact there was a kahuna on a viable gap up, but it's underneath the 50, so I would probably ignore that. So I think my take on these stocks is that they don't look great, but maybe they were the first in this market to roll over and have started to bottom, and we're starting to see some of them pick up and move positive. Internet retail, can you say Facebook? I mean, I guess if you don't own Facebook now, is it too late? I bet if you don't own it now, a year from now, you'll be pissed off that you don't own it. So, it's getting more expensive. It's taken out its IPO high, but it's got earnings per share growth. Everything is green, a number of pocket pivots. It kept on going despite the market overall rolling over. It looks damn good, and it looks like something that you need to own. You can let it come in if you want, or it might someday look like this, which it just keeps on running. And despite the news and everything else, Netflix at near all-time highs, very strong. Hard to buy a lot of a $300 stock, no matter how much money you have. Shutterstock, I like this one as well. I don't know if the earnings growth, the fundamentals, actually support the price, but I love the fact that pulled back to the 50, actually undercut it, which I didn't love. A couple of kahunas here, but on Friday it had a kahuna, big volume, and a viable gap up. That's a very strong stock in a weak market. Again, not the greatest fundamentals, but it's in the right group. You look at something like Priceline, finally closing above 1,000, and is this an expensive stock? No, they don't split. Growth rate's over 20, and it makes enough so it has a multiple of 30. It grows at over 20 times. It's not cheap, but I don't think you can argue that this is way overpriced. I'd rather buy it coming down to a major moving average if I ever see that again. Lots of good things in this. Yelp is another one that a lot of people like. Getting a little top heavy. It looks like it's meeting resistance here at about $70 with a red candle high on Friday. I don't totally understand this stock. I don't like its earnings per share, but I do like the app, so that might be about where it's at. All about mobile. Go back. Thrifts and mortgage. We'll look at the first one, and I'll see if there's anything on the list that really stood out to me. I don't know anything about this group. Here's Prosperity Bank shares. But left to right sideways consolidation from the middle of July. So you got 8 weeks of consolidation, pull back to the 50. You've got a squeeze in place. You had a pocket pivot. You had volume. You had a kahuna, mostly green except your accumulation distribution. That's extremely bullish looking to me. And I don't know much about the company. I'll probably do some research, but that's an interesting looking chart. In a market that's pulling back, I want to buy things closer to support, not things that are out in the stratosphere. Semiconductors. The first one I know very well, I'm going to look at a bunch of these because I think this is some of the more exciting part of the market. Himax is a small company. Google's made an investment in it. They are a big producer in the chain of Google Glass. The fact that Google made a public investment in them tells me a couple things. It sort of tells me for sure they're part of Google Glass. Also says that why wouldn't Google want to buy them? It's not exactly an expensive company. How much Google stock would you have to give up to buy a company with a market cap of $1.8 billion? It looks expensive, but it's not. If you look at its long-term earnings per share growth, it's probably in an early growth phase. It's certainly getting extended. I'd rather buy it closer to the 50-day moving average. This, again, is one of my holdings. It's one of my favorite stocks. I've seen $12 and $13 targets. I've got a big position in this. I've been in it since it was about $3, and I'm planning on taking some profits before this market rolls over. But I think it's a great story, and no reason I think it doesn't keep going. Avogo, don't know much about what these guys do. Sort of a saucer. I don't think that's a cup, a handle on the cup. Taking off multiple pocket pivots, everything is green. You can see it makes some money. JKS, I like this one a lot. This is one of the fast-moving solar companies, a junior solar that makes money. Look at that earnings per share growth up here. Had a viable gap up and lost it, sort of lost it, because here was the close. It opened here, traded up the pole, and pulled back during the day. So it really didn't trade below, or didn't close, it closed near the bottom, but still above the close of the prior day. If this thing trades up on Monday and the market doesn't roll over and you don't have a big solar position, this junior solar I think is attractive. GT Advanced Technologies, I think I found out this week, it's involved in the LED industry and it's a cheap stock, turnaround stock, lose, 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 make. And when I looked longer out, it's projecting to make money. And a viable gap up on Friday. It's probably still viable since it didn't do anything on Thursday, didn't do anything on Friday. If it opens up, I might set a bar maybe at the close on Thursday, maybe the high on Thursday, and if it takes that out, I might want to go long in GT Advanced Technologies. NXP, another stock. I think the fundamentals support it. You had a pullback to the 17. Teardowns over the weekend show that the M7 motion key, or motion chip in the new iPhone 5S comes from NXPI and not InventSense. So you might see this one raise while InventSense may take a hit. Of course, I own InventSense, but such is life. Another cheap stock I thought was interesting is TriQuint Semiconductor. They've got a bunch of earnings coming into the stock. They did basing here, and you could call this cup, handle. He had volume coming in on Friday. Everything is green. Look at the earnings per share growth. And this is one that I put on my buy list, but it's a very cheap stock at about $8. So there's a reason why I mentioned technology and what's working, because you just saw a bunch of them. Application software, I always think this is a mixed bag. TIPCO software had pulled back hard, and I like a couple of these I'll look at. And you can see you got 16 of them are higher than the index. So TIPCO had a Bible gap up on Friday, gave up much of its gap as the market sold off, but still had a very powerful day. Makes money. I don't like its earning per share growth. The one that I like the most in this group is NetQuinn, which I'm currently long on. And it's pretty much at its highs, had a doji, high doji on Friday. If it opens up, I'm happy. If it opens down, I'm probably going to close out my position because when the market rolls over, these things are going to probably fall hard. Look at the earnings per share growth that you see in this stock. So if the market is strong, or if you can pick this up on a pullback, NetQuinn is one that I think will out there, but not in a lot of sectors. Casino and gambling, that was in my PowerPoint, and you can pick which ones you like. I'll look at, I haven't looked at scientific games today. I'll look at PNK and then we'll move on. Notice that this stock does not have great earnings per share rank, but it's got great group rank, great relative strength. And here it comes. You can see it gapped up, or not gapped up, but had some big moves at the end of the week despite a down market. Good earnings per share growth coming in, so it's a bit of a turnaround play. It's not an expensive stock. Everything is green. Two pocket pivots, two kahunas and a DI crossover. Everything green is compelling. Do your own research and figure out why it's moving up. I'm interested in pink as well, PNK, Pinnacle Entertainment. Now, I already have Las Vegas Sands and MPEL that I've mentioned before, and I also have a Caesars, which I don't quite understand the fundamentals on. But here's one that has great earnings per share growth, a turnaround play with earnings coming in, pulling back a little bit, probably setting up a good time to buy as well. So top-down investing is basically going through the market the way I'm going through, looking at how the market is, looking at the sectors, or in this case the industries, and picking the best of the best. We'll look at just the first one here. I don't know much about property and casualty. You can see the group rank has been weak, so this fact that's moved up here is a change. So maybe there's a bit of a turnaround in this category. And you can see, that's Boyd Gaming, pull back, so it's in an uptrend, kind of sloppy, pulls back to the 50, goes up again, all green, big volume on Friday, great earnings per share growth, but not a lot of earnings. Might be something you want to check into. Let me see if there's anything here that made it. Hilltop Holdings is one that I have, and I've talked about it before in these calls. It broke out last week. It's one of these giant earnings plays, and I just was waiting for it to take advantage of those earnings, and it just shot above the 50-day moving average last week. Kahuna, tons of volume, everything's turned green. I still like this as I look going forward at its earnings per share growth. By the way, I have a lot of losers too. But if I'm doing top-down investing, the ones that are not doing well, probably not the ones that are going to come up. Electrical components and equipment, Generac, these are the guys that made all the money in the Northeast when they sell generators, so when Sandy came through. I don't get, I don't like it when it goes light. I don't get their earnings per share story. I don't get, they make money, but they don't have a whole lot of growth, although they had some growth the last couple quarters. But it pulled back to a great buy point, which is the 50-day moving average, bounced off of it. Had doji, opened up higher on Friday, which was a bad day in the market with a kahuna in a pocket pivot. Everything is green, and I think the stock continues to move up. A lot of people seem to like Generac. So right-clicking and hitting left key on their back. Group number 10 is air freight and logistics, changed to index group. And I owned Swift, and I got stopped out, a trucking company this week, because they pre-announced bad earnings. And of course, the stock went back up to new highs after I got stepped out. So FedEx was the highest. You know, some of this stuff just works. And when great companies pull back to the 50-day moving average, the next day they take out the 8-day exponential, they're saying, buy me. And that's the signal I like to see. You had a couple kahunas, some pocket pivots come in, gapped up. Certainly FedEx, although it's kind of a jumpy stock, it certainly looks like it's doing quite well right now. All right, so that's the top 10 groups. You see if there's anything else that stands out as I go through my list. We're at about an hour, and I probably got about 10, 15 more minutes. The agriculture, I talked about fertilizer last time. You can see 5 days, the potash stocks had a good move. The stock I like here, which isn't in the fertilizer group, but to me it's an agricultural play. And if I was to buy stock on Monday, based upon what the market does and everything else does, perhaps my favorite looking chart of the week is going to be this one. Remember, I like pullbacks on fundamentally strong stocks with a signal that they're going up. So this is Archer, Daniels, Midland. I think they used to make comments about they feed the world. Lower left, upper right, so it's in an uptrend. Pretty deep pullback here, just got above the 50-day moving average. So I'm buying it right where the 850 crossover occurred. Had a pocket pivot, everything is green, and it's got earnings coming into the stock. That's what I like to see. And this one looks better than the fertilizers. So I think we came up with quite a few stocks. Now let's look at a couple of other things that I do. Just for grins, if I only got a few, or not a few, but only 25 sectors that look good, how many look bad? And you can see weakness abounds where there is from number 2 to 53. So 52 of them: gold, computer hardware, home builders, pharmaceuticals. And you notice we haven't talked about biotech except for NSPS, or NPSP rather. Biotech got racked a little bit this week, although Celgene, one of my favorites, continues to be up at around $150 with its all-time highs. So that's how I do my top-down investing. Now, a lot of you are not going to want to do that. They want some shortcuts. So let me show you 3 or 4 shortcuts. Shortcut number 1. I do this every time because I just love this shortcut. This shortcut is called Group Inclusion Filter. I go in my, close this out, Designer. And I open up the Smart Groups. I go into Tools, Group Inclusion Report. So the whole premise of Group Inclusion Report is if these pre-formatted scans come up with stocks that are good stocks to buy, and that stock ends up in lots of these scans, then it must be a really good stock. So let's see if we can find some of those. So I'm going to go into my favorite groups. I'm going to go into HGSI strategies under Morales and Catcher. I want to look at Bible gap ups, and I want to look at pocket pivots. Under Woodward and Brown, let's go back to the beginning of my video. What was working? Best of Woodward and Brown, best stocks under $10, best criteria, ERG 240, growth, HGS 100, leaders, QEPS acceleration, stocks boosting to the upside, strong EPS, relative strength near 52-week high. I want to make a group from it. I want to call that group AAA, Web, Gems, 9.22. All right. Now I hit OK, and it asks me if I want to save it as a, come on. So these are the stocks at the top of the list that made it in the most different smart groups, and it should pop up momentarily. No index. So another thing that I do on a bottoms-up approach is I identify these, and let's look quickly at these top 10 from a bottoms-up approach. So these are stocks that we're looking at because they made it into a higher number of the smart groups than other stocks. So this is not top-down, but it's looking for the strongest stocks in the market right now, sort of a bottoms-up approach. And here's the group we just made, Web Gems, 922. Make sure I go on. Let's go. Oh, that's the one I picked. Did I pick 30 and not 10? Yeah, I picked too many. I picked 30. So you know what? Let's go through these as fast as I can. Some of these we've already looked at. Some we haven't. But it'll give you a good feel, I think, of what's working in the market. Apologize if this goes long, but usually people say they rather me shut up in the beginning and just look at stocks. So I'm going to take a few minutes to look at some stocks. This is my favorite shortcut I showed you, and it's the group inclusion filter. Shutterstock, I think we looked at before. I didn't think the earnings necessarily support the fundamentals support the price, but it had a Bible gap up close near the high on Friday, huge volume in a kahuna. Certainly a Bible looking from a technical perspective. LifeLock, lower left, upper right, multiple pocket pivots, all is green, huge volume on Friday. It's got some earnings coming into the stock. From a fundamental perspective or technical perspective, looks very strong. It closed in the middle of the day on Friday. I'd like to see what it does on Monday. Towers Watson, HR outsourcer, I believe. I'm a buyback guy. I want to buy the stock here. I want to buy it where it pulled back to the 50, had a kahuna pocket pivot on volume. It's a little bit extended here, and I haven't talked much about the high jump, but it's up at the top. So even though it technically looks strong, everything is green, bunch of pocket pivots, it's a little bit too extended. The earnings per share growth, not very strong. Hilltop, that's that the commercial insurance guy showed you that had the big breakout here on huge earnings per share. On assignment is a temporary staffing, got to like lower left, upper right. I'd rather buy closer to the 50, but it's worth looking at. Pocket pivot, everything is green, got good earnings per share growth. I might look at this further. Facebook, I've already looked at Facebook, so it's a strong stock. We already know it. Old Republic International, I think this is one of those banks. Property casualty, my bad. And again, lower left, upper right. Pocket pivot, huge volume, had a kahuna earlier in the week. This would have been the time to buy here. Probably worth looking at that great earnings per share growth. Something's going on with this sector. That's why it's in the top 10. This is a leader. Celgene, I already mentioned, is my favorite long-term biotech. Everybody from HGSI land knows how much I love this one. Lower left, upper right. It's kind of at a pricey place. I expect it to sell off this week just because it's hit a place that it's not broken through before. It's at an all-time high. But if it breaks through this 150, I'll probably be buying back my 150 calls because I think it's going to go higher. My guess is that it's going to go sideways for a while and catch up with itself. But certainly as a leader, Regeneron, they have a number of products on the market. Part of their pricing power or stock power is fueled by the speculation that Sanofi will be buying a bigger piece of them. Really a neat company. They've got marketed compounds, great pipeline, great science. All-time high on Wednesday, pulled back some on Thursday and Friday. It's a little bit extended for my stomach. Generac we already looked at, which is the generator stock, lower left, upper right, sort of, kind of more sideways, pocket pivots, kahuna on Friday. Financial engines, I own this one in one of my portfolios. I don't understand why it keeps going up because the fundamentals don't look so strong. They look strong, but look at the stock. It's way extended from when I bought it, but it keeps going up, and it hasn't met any of my sell rules, and we'll continue to watch it. Friday was happy. Big day on Friday, pocket pivot, huge volume, everything's green, certainly is a leader. Angie's List, there's a pullback, and I really nibbled in my mind on this one this weekend. It's got earnings per share growth. It's a turnaround play, so lose, 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 make money. It's pulled back to 200-day moving average and bounced several times. It may struggle to get above the 50. It had a pocket pivot and some volume and a DI crossover. I like to see three things, the crossover, the pocket pivot, a kahuna. So I'm going to watch this guy, and if it can get above that 50 and stay there for a few seconds, I'm probably going to be a little bit more compelled to look at it further. It's uptrend, pull back a little deeper than I'd like. If it gets above the 50, it might be interesting. Blucora, I don't know anything about this guy except it's taken off. This was the time to buy it, obviously on the 50. It's extended by high jump. It's too extended for me, but it's certainly been a leader. Taser, these guys apparently got some new products. We've talked about it several times on my webinars. Looks like it's a growth company all over again. But it's kind of extended with multiple buyable gap ups in the last 5 to 7 days. There's a story to this stock. I think it's related to the new technology that it's bringing to the market. But it's in a new growth phase, huge volume on Friday. Remember, this was a horrible day in the market, and it just had a great, great, great week. Priceline, I already talked about, $1,000 stock that's probably not too expensive, although it's expensive. Nick used to call it e-governor or called Woodward Governor, I think. It's one of the electrical component stocks. They were in our top 10. Actually, my bad. This was a management consulting services. I'm mixing this up with the one I think is NIC. Love the chart. Big move up, pull back to the 50, runs again. DI crossover, certainly not too early for me to look at it. Don't love the fundamentals on the growth rate. It's worth me taking a look at afterwards. One of my favorite stocks, MEI, Methode Electronics, gapped up, Bible gap up, sideways. Here's your little flag, running again. great fundamentals. I think the earnings support the price. I'm in this one, although it is very extended, no question about it. Netflix, we looked at it before, beautiful pie lower left, upper right, makes money, expensive stock, but looks great. Encore Capital Group, this came up on my review today. This is specialized finance. I think they buy consumer debt. Something happened with the stock earlier in the week. It had kahunas back-to-back. Volume came into it. Everything has turned green, not fully extended, has earnings per share growth. Might be one worth to take a look at. Sturm Ruger, it's guns, and the more violence we have, I think the more the question becomes about what we'll be able to do with guns, but obviously the stock has been doing well. Repligen is a biotech company that doesn't market products yet, but has been a nice uptrend. Pull back to a squeeze of the 8 to 17, the 50-day moving average. A break above here would be interesting. Has DI crossover down, so I'm not buying this one yet, but I'm liking how it's going sideways, and it's one I will track. Oasis Petroleum, we talked about last week, the week before. It's one of these junior oils with great earnings per share growth. It trades at a multiple of 20, and it's got earnings per share growth of 80, 90, 100. Well, if you're growing that fast, you're either going to have to grow your price or shrink your multiple or both. And I suspect that the stock will be a $60 or $70 stock with a lower multiple if it hits its numbers. I mentioned the big construction companies. Here's one of them, Chicago Bridge and Iron. I don't know what happened to this group, but several of them started moving up in the last 10 days. And here's a crossed above the 50, so the good time to buy the stock, multiple kahunas and a pocket pivot, DI crossover. It's run up a little bit, so I might wait and see if I get it to pull back, especially with a red candle high and a pocket pivot down. But this is when I saw this and I saw others in the sector, it made me pay attention. My favorite stock that I own, although it's looks a little nervous right now, is AFOP, which is the VectorVest #1 stock as well. And you can see lower left, upper right-hand corner. They came out early in the week and they upped their guidance, which is always a positive thing if you want to see your stock price go up. And certainly in a very bullish run, driven by very bullish earnings that split last week if the number looks smaller than you're used to. NSM, like OCN and WAC, are the mortgage servicers. They buy the portfolios for the big banks. I don't believe they carry a whole lot of credit risk, and they seem just to make money on servicing them, and their big risk is will they have growth issues of getting new mortgages. They all have great earnings per share growth. Their charts all look the same, and I own OCN, and you might want to own one or buy one on a pullback. PGT makes the plastic siding for houses, and you can see lower left, upper right. It's pulling back right now, DI crossover down. I'd rather see it bounce and hold, so I'm not interested. A little late in the day for that one. Synaptics, they make the little mouse pad on your notebooks. Good earnings, great earnings per share growth. I think that's who they are. Yep, everything has turned green on this. It's had a shooting star on Friday. The market weakness is bothersome, but these are stocks you might want to look at if the market rolls over. So there's a bunch of stocks from you, and all I did is find the stocks. How come market access wasn't in there? Oh. All right, so that is the group inclusion filter. A couple of other hints. Go into all securities. In your warehouse view, go under HGSI strategies, Woodward & Brown top-down investing, Woodward & Brown archive, reference lab, miscellaneous, hit Sprinter one-step Bondo, and here you have 95 stocks, and most of these, or many of these we've already looked at. These will be the best of the market right now. You notice earnings per share relative strength group rank mostly greens, accumulation distribution all green, Bongo dailies all green, most of the weeklies are green. These are strong technical fundamental stocks, and you can find them by looking at all securities and then Sprinter one step with Bondo. And then the last thing I want to show you before I say goodnight is under Smart Groups, you have Morales and Catcher. You hit that. Here's your warehouse view of all the stocks that had viable gap ups this week. We looked at several of them: Shutterstock, Taser, Jinko, Columbia Banking, Floor is another one of those engineering stocks, TIPCO, the software company. You come down here and find all the stocks that had a pocket pivot on Friday. There's that FinGen, LifeLock, Old Republic, saw those. You can come down here into the Woodward and Brown. If all you're going to do is look at this one here, Best Woodward and Brown, I'm going to take off my filter because I'm limiting price and volume. So if all I did was look at this one place and look at these two, if I look at Woodward and Brown Best Of, every one of those stocks, let's look at Market Access and AltaSource portfolio, because we pretty much have looked at all the others. So just one Smart Group outperforms on a regular basis the top 10 stocks based upon high growth stock Woodward and Brown criteria. Here's Market Access, a lot like FinGen, same sector, lower left, upper right. Pocket pivot on Friday, looks extremely strong. And the other one we didn't look at was AltaSource. And I think, again, it's in the same type of investment data type of a group. Big run-up, pocket pivot on Friday. The other one to look under is best stocks under 10 bucks. So last week, I own a number of these. This was probably my best play last week. FU, any stock, and you can imagine, oh yeah, FU, that's the name. And you can see FU, only FU'd if you were short the stock. Just 1, 2, 3, 4, 5. So if you bought it at the open on Monday, you went from 5 to 9 before it rolled over. I don't know if it's too late. It kind of makes earnings for a cheap stock, which is what got me interested. So the fundamentals, did it make sense for the price of the stock? It probably goes higher. The other one I liked down here, there's a lot I liked here, Century Casinos, was Deng. And I bought some Deng maybe 2 weeks ago. Where is Deng? Hold on. I don't see it. We got Triangle Petroleum. This is one of my favorite junior oils. Great earnings per share growth. Still a cheap stock. I could have sworn, let me see. Oh, here it is. Here's a Chinese e-commerce stock. Pull back, looks like it wants to move again, makes money. So I'm going to say goodnight now. So let me just summarize what I did, and I'll put my buy list up because people always, what stocks you looking at? These are what worked for me. That doesn't mean they have to work for you. Let's see, here it is. So this was the list of stocks. Let's move, all right, try something different. File, open, computer, desktop. So these are the stocks, many of which we've looked at tonight, that are my enriched buy list, of which I will put them into my auto trading programs and TradeStation. I'll be scanning them during the day, looking at them. But these were the stocks that I thought were some of the most compelling. So last comments, I'll leave that up there for you, is interesting market. I think that if you ask me, it'll be a little bit higher at the end of the year than it is now, but it's going to get lower first. Not very profound. I think this week will be an interesting week where there's more risk than I think reward opportunity, and we could see some seasonal weakness over the next couple of weeks. Growth stocks are still working. They had a great week last week despite my bearish tone. I showed you how I use top-down investing to get a sense of what the market is doing, which industries are leading, and within those industries, which stocks come out. And then I used the sprinters. I looked at some of the specific smart groups, and then I did the GIF, group inclusion filter, on some of the smart groups to come up with an enriched list of stocks. I wish you all best wishes in your trading. Trade the market we have, not the one that you think we're supposed to have or that I thought we might have before the market opens on Sunday. Everything changes, and what I do tomorrow is dictated by what the market does, not what I think it's going to do. Have a good night. Thank you for coming, and we'll be back next week. Good night, everybody.